For decades, the United States has dominated the global economy, setting the rules of world trade, controlling the leading currency, and shaping the financial markets. But more and more experts are asking a worrying question. Is the foundation of the American economy beginning to crack? Is the U.S. still the center of global power, or is the nation heading toward an economic downfall? First, the foundation of the superpower and how it's eroding. To understand the possible decline, we need to look at the foundation on which America's economy was built: consumption, innovation, capital markets, and the dollar. But all of these pillars are starting to shake. The United States has been living beyond its means for decades. The country consumes more than it produces and finances the difference through debt. The national debt now exceeds $35 trillion, or more than 120% of GDP. For comparison, in the 1980s, that figure was below 40%. This debt bubble keeps expanding, and it's becoming increasingly expensive. Due to the Federal Reserve's interest rate hikes, the cost of servicing U.S. debt has exploded. In 2024, annual interest payments exceeded $1 trillion, more than the entire U.S. military budget. A huge part of the federal budget no longer funds education, infrastructure, or research, but simply pays for past debts. That's a serious long-term risk. Second, the dollar's dominance, a fading power. Since the end of World War II, the U.S. dollar has been the world's undisputed reserve currency. Around 60% of global foreign reserves are held in dollars, and key commodities like oil and gold are traded in dollars. This unique status allows the U.S. to finance its debt easily because the whole world needs dollars. But that power is slowly eroding. More and more countries are moving away from the dollar. The BRICS nations, Brazil, Russia, India, China, and South Africa, promote trade in their own currencies. China is pushing the yuan into international financial transactions, while countries like Saudi Arabia and India conduct energy trade outside the dollar system. As global demand for the dollar decreases, so does the demand for U.S. bonds. That means America is losing its ability to borrow cheaply. A decline in dollar dominance would not only be symbolic, it would hit the American financial system at its most vulnerable point. Third, the economy, growth at any cost. Yes, the U.S. economy is still growing, but much of that growth is artificial. It's built on debt, cheap liquidity, and credit-fueled consumption. More than 70% of U.S. GDP comes from consumer spending. Yet many households depend on credit cards and loans. According to the Federal Reserve, Americans now owe over $1.1 trillion in credit card debt, a record high. And defaults are rising. The housing market tells a similar story. High interest rates have cooled demand, making mortgages unaffordable for millions. Meanwhile, the stock market keeps booming, not because of real productivity, but due to speculative overvaluation. Many corporations buy back their own shares to boost prices, while the real economy stagnates. Wealth inequality has reached historic levels. The richest 10% of Americans own over 70% of total wealth, while the bottom half has almost no savings. Next, political paralysis and growing instability. Another risk factor is political dysfunction. Congress is deeply divided, leading to repeated budget deadlocks and debt ceiling crises. In recent years, the U.S. has narrowly avoided default several times, a sign of how fragile its political system has become. This instability shakes the confidence of global investors. At the same time, the U.S. is entangled in costly geopolitical conflicts, trade wars with China, sanctions against Russia, and military commitments in Ukraine and the Middle East, all of which drain resources and weaken economic focus. Fifth, structural weaknesses like education, infrastructure, inequality. Behind these trends lie deeper structural problems. The education system is expensive and unequal. Student loan debt exceeds $1.6 trillion, burdening younger generations for decades. Infrastructure is deteriorating, while China is building high-speed railways, ports, and megacities at record speed. Social inequality continues to widen. Millions live in poverty, while a small elite benefits from financial speculation. This divide threatens social cohesion and, in turn, long-term economic stability. How China is exploiting America's weaknesses. While the U.S. is struggling with internal problems, China is strategically taking advantage. Beijing fills the gaps that Washington leaves behind. Through trade agreements, infrastructure investments, and the Belt and Road Initiative. China is expanding its influence across Africa, South America, and parts of Europe, while the U.S. relies increasingly on confrontation. Technologically, China is investing heavily in artificial intelligence, semiconductors, quantum computing, and green energy. In many sectors, it's catching up, and in some, already ahead. Financially, China is building alternative systems like CIPS, its own version of SWIFT, to reduce dependence on the U.S.-controlled global payment network. While America is constrained by debt, division, and inequality, China can plan long-term and act decisively. If these trends continue, China could soon surpass the U.S., not just economically, but also technologically and financially. Lastly, why America might still survive. Despite all this, it would be a mistake to count the U.S. out too soon. The country still has the world's most innovative ecosystem, top universities, strong research institutions, and a unique entrepreneurial culture. The dollar remains, for now, the global safe haven. America's technology and energy industries are still world-leading. Thanks to the shale gas boom, the U.S. has become a net energy exporter, giving it strategic independence. And militarily and diplomatically, it remains a superpower capable of shaping global markets and alliances. So the question isn't whether the U.S. will collapse overnight, but whether it can maintain its lead as others rise. The fall of the U.S. may be not sudden, but possibly slow and steady. America's biggest enemy isn't another nation, it's its own system, debt, division, and the illusion of eternal dominance. Meanwhile, China stands ready, organized, ambitious, and economically powerful. Whether the U.S. regains its strength or loses its position will determine who leads the global economy of tomorrow.